Hello everyone, welcome to QHub TV. So if we observe the last week performance of global stock markets and Indian stock market, we have seen one side downward rally in all the indices because of already discussed news, that is one upcoming Federal Reserve Committee decision. Another news which was not expected by anyone and any market, that is SVB. Actually, SVB is not a new problem, it is the byproduct of the inflation. So SVB is the one of the largest bank in US. So it is the well-known parking place for the venture capital investors and IT startups firms. So since 2021, the Silicon Valley Bank collected the deposits from the VC investors and startup firms in the huge volume. So after collecting the deposits from the said areas, that pooled money invested by the SVB in the bonds. It means with that money, with the deposits of the venture capital investors and IT startup firms, the SVB bought the bonds at the lower prices. So after the Fed started increasing the interest rates quarter to quarter, the bonds which are in the custody of SVB so declining, means the value of the bonds declining. So in recent time, the Federal Committee Chairman Powell announced that in upcoming meetings we are going to increase the interest rate hikes rather than expected, means what we have expected, what the markets are expecting in the coming meeting. So more than that expectations, the interest rate hikes will take place, like that the FOMC chairman announced. So once the hawkish decision comes out from the FOMC chairman, the SVB bonds value declining like anything in the market. At the same time, so it is the one case. So generally it is not a new problem for bonds when a financial institution dealing with the bonds. This type of fluctuations are common, but the actual problems arise when the startup firms are facing difficulty in mobilizing the funds from the other markets to run their operational activities and working capital requirements. Even VC investors are also facing the problems in raising the funds for their future surveillance. So when the venture capital firms and startup firms are facing the financial problems, are struggling to collect the funds from the outside, then they started withdrawing their deposited money from the SVB. Actually the SVB is incurring into the losses because their majority of deposits are in the form of bonds. So the bonds are losing their principal value day to day, and at the same time the deposit holders submitted their withdrawal request. So in order to meet the withdrawal requests made by the startup firms and VC investors. So the SVB started selling the bonds at the market price. Market price means at the lower prices here, at the lower prices here, because they purchased the bond at one price, now they are selling at the lower price. So what happens? So the difference is the loss for the SVB. So the SVB selling the bonds every day to meet the requirements of their depositors here. So now, in order to strengthen the balance sheet, SVB knocked the doors of outsiders for the funds, but now the market is completely scared, because the uncertainty is built, okay, regarding the interest rate hikes. So no investor came forward to pump the finance or to supply the finance for the SVB. So then the SVB started selling their assets to meet the requests of the client. So it was happening since 1 or 2 weeks. So now the requests, whatever the actual situation of the SVB now spread across the US markets and among all the investors, okay, who have deposited their money in the SVB. So now immediately after knowing the situation of the SVB, then all the investors and the deposit holders started withdrawing the money from the SVB. So then the SVB unable to on Thursday and Friday, it was a situation where the SVB unable to meet the requirements of the deposit holders. So we can say it has become like a insolvent. Insolvent means we can use the insolvent word when one particular financial institution unable to repay its obligations, then the government will declare that institution as the insolvent here. So that the type of situation was facing by the SVB. So the banking indicators immediately closed the SVB operations in order to protect the insured depositors. So this news created the panic, okay, on Thursday and Friday, not only in the US market, in remaining stock markets also, especially in banking sectors. So because of that news, that SVB news also, we have seen a continuous fall in US market. If we look at the recent performance of the US markets in the last week, the Dow Jones lost 1500 points, okay, where S&P 500 250 points and NASDAQ 700 points in the last week here. It is the US. Actually there is no technical problem in the Indian stock market. So whatever the fall we have seen in the last 5 days, that is because of US markets only. If you look at the Indian stock market, Nifty collapsed 400 points from the intraday high in the last week, where the bank Nifty collapsed at around 1200 points from the intraday high during the last week here. So in especially only 1 or 2 days we have seen the gap up in the last week, but in the rest of the days we have seen the gap down only in the Indian stock market. But so after the opening of the stock market, the markets are unable to go to the higher levels, because there was no follow-up buying at the higher levels, because there is a question mark in the minds of the investors and traders here. So that's why the markets, both the indices come to the Indian stock market, Nifty and Bank Nifty is unable to sustain the higher levels. So when Nifty and Bank Nifty generates the upward rally during the intraday, again the fresh selling, okay, creating by the investors and traders. Okay, so that's why the Nifty and Bank Nifty now trading below the indicators. And the very interesting thing is that the put call data is also is a worrying factor for the Indian stock market, because if we look at the put call data, now the Nifty is trading at 17,412. It closed on Friday. So if we look at the put call data, so 17,300 the open interest by the put call put writers, that is 95,646, then 17,200, then 60,014, and 17,100, 48,417, then 17,000, 83,856. So if next week's Nifty breaches 17,300 level, then the doors will open for 17,000 also, because after 17,300 the huge put writers placed at 17,000 level, 17,000 level only. So this is the lower side. The higher side, 17,400 is a major hurdle. So 1,20,697 open interest built up by the call writers. So 17,400, then after 17,500, 1,66,503. So it's also, so now it is very difficult to cross the 17,400 and 17,500 in the coming week. Anyhow, we may expect the gap down also, because on Friday the US markets closed in red only. So the next week is very tough for the both Nifty and Bank Nifty. So whereas the Bank Nifty is closed at 40,485. So the there is a, I'll say at 40,000 level, 68,826 open interest built up by the put writers. Then after 39,500 and 39,000, it will, but here the banking index is very weak compared to the Nifty, because the put writers lost their confidence here. Nowhere the put writers at any level. So only 40,000, only 68,000, 39,500, only 49,000, 39,000. So altogether hardly 1,20,000 open interest built up by the put writers at 40,000, 39,000, 39,000. So if Bank Nifty breaches that 40,000 level, the doors will open for 39,000 in the coming days also. If you look at the call writers, 40,500, 1,06,634 open interest built up by the call writers, then 41,000 and 41,500, means there is a 500 points gap between the writer to writer, put writers to put writers and call writers here. So now coming to the next week news. So very important week again. Before the major event, that is on March 13, consumer inflation expectations will be released. So the markets are keenly watch this data also, because based on this data only the FOMC review their decision. Then on Tuesday, very important data again, that is consumer price index, CPI inflation rate for the February month also released. So back to back important events are there. Then March 15th, retail sales for the February month will be announced. Then on the same day, producer price index inflation rate for the February month will be released. On Thursday, housing statistics for the February month will be released, and Fed manufacturing index data is also going to be announced on Thursday. On Friday, industrial production statistics will be released, and on the day, University of Michigan Consumer Sentiment Index preliminary reading for the month of March will be announced. So all these days, means Monday to Friday, very important statistics are going to be released. Okay, so the markets will move based on the outcomes of this statistics here. So now here I am suggesting the traders just you play in the market during the intraday only. So don't carry the overnight positions. Why? Because now all the markets, especially Indian stock market, is following the US market only. So that's why and now US market is completely filled with uncertainty. So for some days avoid the overnight positions. Okay, so it is better to play during the intraday only. So this is about upcoming week stock market information. I hope you have enjoyed this video. Thank you.